You've been told to focus on subscribers and views. Honestly, that's a losing strategy in 2026. The YouTube algorithm isn't a simple machine you can hack with keywords anymore. It's an intelligent, personalized system built for one thing: keeping viewers satisfied. And because of that, it's a system where most creators fail simply because they don't understand the new rules. It's a brutal reality, isn't it? You pour weeks into scripting, shooting, and editing a video you're proud of, only to watch it flatline with a few hundred impressions. It's frustrating, it causes burnout, and it makes you question why you even bother. But what if the algorithm is constantly sending out signals? What if it's practically telling you what it wants to see next? The problem is, most creators can't read them. They're still playing the old game while the rules have fundamentally changed. In the next few minutes, I'm going to show you what these signals are and give you a new framework for your content. We're going to stop guessing and start winning. We're going to stop just making videos and start making strategic bets on topics before they take off. Section 1. The new market you're trading in. To win, you have to understand the new marketplace you're playing in. Think of the YouTube algorithm less like a gatekeeper and more like a stock market for attention. In this market, the old currencies of raw watch time and subscriber counts aren't the whole story anymore. The new currency, the one that truly dictates success in 2026, is long-term viewer satisfaction. YouTube's main goal is to keep people on the platform, happily watching. It does this with a heavily personalized recommendation system where every viewer's feed is a unique universe built from their specific watch history. This means two people searching for the exact same thing will get different results. Your video isn't competing against every other video on a topic, it's competing for a single viewer's interest in a single moment. The algorithm is now weighing signals like repeat viewing, how many of your videos someone binges in a session, and even direct feedback from surveys. These satisfaction signals have become critically important, sitting right alongside traditional metrics like click-through rate. But the most critical concept is something I call viewer journey continuity. This isn't an official YouTube term, but it's a powerful model for understanding how recommendations work. The algorithm doesn't just care if someone liked your video, it cares if your video fits seamlessly into the viewing path they are already on. It rewards what's known as topic momentum. Channels that jump between random topics can struggle because they break this continuity, making it harder for the algorithm to know who to show their videos to. Channels that deepen a clear, binge-worthy lane gain momentum and are rewarded. The system even uses early data from a small test audience to predict how your video might perform before giving it wider distribution. When you see it this way, everything changes. The algorithm is the market maker, and your videos are the assets it prices. Once you understand the signals, you can start winning. Section 2. What is a YouTube growth stock? So what if you could invest in YouTube topics like they were growth stocks right before they skyrocket? In 2026, that's not just a cool metaphor, it's a real strategy. Instead of buying shares in a company, you're buying into topic categories like AI explainer shorts, cozy study vlogs, or hyper-local finance tutorials as if they were stocks on the rise. A growth stock on YouTube is a specific mix of a topic, a format, and an audience that's showing rapid upward momentum but is still relatively uncrowded. Think of its intrinsic value as the long-term viewer demand for that topic. Its price is the current level of competition. Your job as a creator investor is to find niches where the value is high but the price is still low. You're looking for a supply and demand imbalance. For example, a new AI tool is released, creating a surge of questions, high demand. But there are only a few quality tutorials on it yet, low supply. That's your growth stock. This is totally different from just chasing a viral trend. A viral trend is a one-time spike. A growth stock is a sustained upward curve driven by real, evolving audience interest. You're not just making one video, you're investing in a topic cluster the algorithm is already looking to promote because it satisfies a clear viewer journey. Section 3. How to find these growth stocks. The 3 key signals. Spotting these growth stock niches isn't about luck, it's about reading the signals the algorithm gives you. There are 3 main signals you need to hunt for. Signal number 1. Strong fundamentals, the demand signal. First, confirm there's real viewer demand. This isn't about what you find interesting, it's about what people are actively looking for. You can spot this by watching for rising impressions and views on keywords in your analytics and on Google Trends. Look for micro-trends, topics that are bubbling up across several smaller creators, not just one huge viral video. That shows broad, organic interest. Another key is high watch time across the category. If the top videos in a niche are just short clips with low retention, it might be a fleeting trend. But if you find long-form episodes or series that people are clearly binge-watching, that's a sign of strong, sustainable demand. These topics are solving a real problem or feeding a passionate interest. Signal number 2, clear momentum, the algorithmic tailwind. Next, you need to see if the algorithm is already pushing this topic. One of the clearest signs of momentum in 2026 is the presence of bingeable series formats. The algorithm loves the behavior that series create because repeat viewing within a single topic is one of the most powerful satisfaction signals you can send. Look for niches where top channels are built around consistent series, like a day 1 to day 30 challenge. The second part of this is that topic momentum we talked about. These are topics where viewers almost always watch several videos in a row. For example, someone watching How to Start a Podcast will very likely search for Best Podcast Microphones next. If your video fits that logical journey, the algorithm will serve it up to them. Finally, look for synergy between shorts and long-form. An explosion of shorts in a niche with not enough deep-dive long-form content is a classic growth indicator. The shorts are building the initial audience, creating a perfect opening for you to capture them with more substantial videos. Signal number 3, the supply-demand imbalance, finding your opening. The final signal is the sweet spot, strong demand and clear momentum, but low supply of high-quality channels. This is where you make your move. One of the most powerful indicators here is seeing small channels, under 50,000 subscribers, have breakout videos on a topic. This is a direct signal that the algorithm is hungry for more content in that niche and is actively testing new creators. If the big established channels haven't already cornered the market, you have a window to become the go-to authority. Mid-roll CTA. If you're starting to see how this investor mindset can totally change your approach to YouTube, then make sure you subscribe. I'm constantly analyzing these algorithmic shifts, and I share what I find right here. Don't miss out. Section 4. Building your portfolio and executing your trades. Once you've found a growth stock niche, you need an investment strategy. This isn't about going all in on one idea. It's about building a balanced portfolio. Think of it as your core and satellite niches. Your core niche is your blue-chip stock. This is the main topic where you build authority with consistent, binge-worthy series. About 70 to 80% of your videos should go here. The other 20 to 30% are your satellite bets, experiments in adjacent topics, or new trends. You can test these with shorts or a mini-series. If an experiment takes off, you gradually produce more content on it and rotate it into your core. This strategy works with the algorithm's preference for topic momentum. But even the best pick can fail with bad execution. Your execution is how you deliver the value. This boils down to 3 things. Packaging, your title, thumbnail, and hook are everything. A mismatch between the promise and the content is the fastest way to kill your satisfaction score. The algorithm now analyzes video transcripts and visual elements to understand your topic, so clarity is king. Retention and satisfaction. Cut the fluff. A shorter video with high retention is often more valuable than a long one that people abandon. Use pattern breaks, quick pacing, and dynamic visuals to hold attention. Most importantly, deliver on the promise of your title. Journey continuity. Design your channel like a deliberate playlist. Every video should end with a clear suggestion for the next logical video, boosting the session time. Use end screens, pinned comments, and official series playlists to make it easy for a viewer to keep watching your content. Risk management. Every investor knows managing risk is just as important as picking winners. One of the biggest risks for a creator is what I call over-diversification. Posting on too many unrelated topics can confuse the algorithm about who your audience is, which can dilute your recommendation power. Another risk is short-term chasing, jumping on every viral trend. This might give you a temporary spike, but it destroys the compounding interest you build within a focused niche. Your best risk management tactic is to have a clear, written thesis for your channel. Define your audience, your core topics, and why you believe this niche has growth potential. Only pivot based on strong data from your satellite bets, not out of panic from one underperforming video. Conclusion: the YouTube of 2026 isn't a lottery, it's a market. It's ruthlessly efficient at rewarding those who understand its new language of viewer satisfaction and topic momentum. Stop thinking like a creator who just uploads videos and start thinking like an investor who builds a portfolio of attention assets. The secret is to stop focusing only on what you want to make and start obsessing over the viewer's journey. Find the questions they're asking, identify the paths they're on, and build the content that serves their next step. That is how you find undervalued